I'm going to record this session for those that cannot make it or those who want to see it again. So just ask for that as we get rolling along. You guys got questions, you know how to type them in, and I will get to them at some point in the middle or at the end. Don't think I'm ignoring it. I'm just going to roll through and I look back and see what questions we have. But there's a pretty good group in here, so let's kind of get started with what we got. What to expect in the next 2 days, because tomorrow, remember, same time, 11:15 Central Time, we'll do this webinar again and cover a little bit more of the application of MarketDelta. We're going to touch on that today, but the agenda for the next 2 days is today getting the live data and chart templates out to you to save you time and introduce you to how easy it is and seamless it is to get your software up and running. And then I'm going to talk a little bit about the footprint market profile, which are two of the bigger keys or most impactful parts of MarketDelta, along with other things, and then the application of it a little bit later today and then tomorrow. So again, this last line I put on here is important. It's not just about how to use the software, but how to use it to trade. And that should be most important to anybody that is on a trial or is getting ready to use it. Again, today, I'm going to go over some live data providers. I'm going to talk about these chart definitions, go over a little bit of an explanation of the footprint market profile and what aggressive and passive buyers and sellers mean, and then a little preview for tomorrow, and then go over anyone's questions as we get going. So real quick, and this is not something that's very interesting, it's just something that's very important. That is the IQ feed, an e-signal or broker data feeds. You guys, a lot of people get stuck in not knowing who to connect to, and it should be the easiest part, and it is with this information. I'm not a e-signal guy, but I heard real good things about it. I use IQ feed, and it's real good data. It's clean, it's seamless, easy to connect, and they have real good tech support. So there's the information of these two data providers that we support, and then your regular broker data feeds that also drive the software. Again, this is important, but it shouldn't be nearly most important. You should be able to breeze by this, and with a lot of this info and emails and contact information, it gets people rolling and started, along with the chart templates, which is my next slide here. It's about getting you, for me, and I can only put myself in a position that maybe a lot of you guys and girls are in, and that is anytime you're introduced to new software, including me 5 or 6 years ago, when I'm looking at MarketDelta, I'm thinking, where do I start, right? And what's helpful is knowing people, trusting people who have used the software to say, hey, these are some good templates that either I use or other people I know use, and it's a good head start to not only save you time, but also a good explanation of what these components and elements are. So that's what that link is that I posted. If you guys got your software open, I'll walk you through where this link is going to take us and how easy it is to import a layout definition, whether it's an individual chart definition or an entire layout. We're going to walk through that. So that's what this is about. It's about saving you time with who to connect to for data, how to get started with templates, and then getting into the more interesting elements of this software, and that is the footprint market profile and all the other different features that it has that any other software has, plus the footprint market profile features. So let's go in, before I start covering the footprint, let's actually click on that link if you guys want to do it, or if not, just watch and I'll walk you through it. Let me first find my there we go. Alright, so I'm going to go to the link. Clicked on the link, it's connecting me to this page, which is all obviously just text. So I right click to select all. Oops, that's it. It highlights, once it highlights everything, I copy it with Control C, then I go into my software, and this is just a blank page of MarketDelta. So I'm going to go up in the upper left hand corner under File, halfway down, Import Definition from Clipboard. That's where it's been copied to. Once I do that, because this has already been imported, it's going to ask me to save, but they'll just populate these 4 charts. I already have this layout imported, that's why it's prompting me to save or rename or replace. So here's 4 definitions that'll pop up, and I've numbered them 1, 2, 3, and 4. And what these are simply is some of the more popular chart layouts and definitions that of people that I know that use. The first one is the one I actually use. It's more of a stripped down basic version of what I use, but just to get you going in the different features, I like a black background, I like a footprint on all my charts, and I like 3 volume profiles. One is today, the middle one is yesterday, and the far right profile is a 5-day. Without getting into too much explanation of the profile just yet, that's the components and the elements in this chart. The footprint obviously in here, and then the 3 profile settings on the right. That's what I like as just the basics on my chart, and I build them out from there. But this will give you a good kind of head start on what you want to look at. Now, real quick, I'll go through a couple of the other ones. This is just your traditional whiter background. It's got what a lot of people like to look at is high volume inside the footprint. It's got these hollow boxes, and you guys could send in questions when you want these features enabled. But all this does is said, hey, this is the highest volume inside the footprint in each bar, right? And it's highlighting that. It also introduces this bottom footprint bar statistics element at the bottom, and what that is simply what the volume, in this particular case, volume delta and delta day is. There's other stats that you could add, but without trying to get complicated, this bottom feature is just the stats in the corresponding bar above it. Okay, so that's another definition that you'll have when you click that link on it, copy and paste it. This third one has a volume weighted average VWAP that covers a little bit more, another element of market profile. Again, this isn't much of a different chart than the other one, other than adding the VWAP in and things like that, but it gives you another chart template to work off of. And then this one, again, everything's adjustable, but this one I think is the most popular outside of mine, and that is what I call a day-night profile. And what it does is it allows you to see what happened overnight and then the day session, but separates the two. And so you see a traditional candlestick bar with the corresponding footprint, and then the dotted box separates the overnight session to the day session. So you can see right now 1501 is the high today, and this is today's range, and then this box here was overnight last night, and then so on and so forth as you go back. So it gives you a nice snapshot of what's gone on historically, and does it with candlesticks and the profile in one. Now, one thing people don't realize, and I'll show you right now, we've done short videos on it, is the traditional candlestick bar is what this is, obviously, and just taking your wheel on your mouse and spinning it will open up and truly then allows you to see inside the charts, which is a tagline of MarketDelta for a reason, right? Because most charts you just see a traditional bar, high, low, open, close, or a candlestick, and this one you're actually able to see what's going on order flow wise inside the footprint. All right, so that segues me to the footprint in and of itself. So let's go back to the PowerPoint slide. Is there any questions so far? And I'll keep going as we head through this. But the footprint, and I don't want to get into too many details for 2 reasons. Number 1, it'll bore you. Number 2, you don't need all the details and analyze every single uptick and downtick. That's what's important, not just in software, but in trading. So many people get pulled in the direction of I have to know this, I have to analyze this. If I spend more time in front of my screens, I should make more money. That might be true in other businesses. It's not true in this business. So I'm going to walk through the footprint. Let me give me a pen here a second. I'm going to take this footprint and I'm going to cut it in half, okay? So if I cut this footprint in half and I just put fictitious prices up, this footprint is showing us that at the price of 3 and the price 2 bid at 3, let's say this fictitious market is 2 bid at 3, right? 2 bid, 3 offer. That means that when this market is at 3, a total of 2,010 contracts traded on the offer when it was 3 offer. Okay, won't worry about aggressive buyers, passive sellers just yet. That's all it's showing us, is that 2,010 traded at 3 when it was offered. Now it never went 3 bid, that's why it's 0. If it went 3 bid and 100 contracts traded at 3 when it was bid, then this number would be 100, but it's not because it never went 3 bid. This number here, 1624, that's how many contracts traded at this price when it was 2 bid. So again, just the beginning to walk you through the footprint. You split it in 2, and you don't worry about trying to analyze all these numbers because you'll waste your time and it'll become a major distraction. You're just looking at it for an abnormal amount of volume that lets out into the market and supply comes out. And you look at that for a couple different reasons as I walk through this webinar, and tomorrow kind of touch on that. For now, I'm just trying to give you guys a sense of what do these numbers mean, and that's it. If this was a fictitious 2 bid at 3 market, 2,010 contracts traded at 3 when it was offered, and 1624 traded on the bid when 2s were bid. Does that make sense? Again, you could overanalyze a lot of stuff in any software, and you really don't need to. You not only waste time, but you get distracted. Now, what's important, I think I can't move this slide. Let me walk through here. Let me walk to this slide and jump right ahead to what a traditional dome. This is MarketDelta Trader, okay, and this is your traditional ladder, which most guys use. I've used a ladder like this my entire career, and simply what this is. Let me pull my pen back. Just focus at this being the center line, right? Everything red above it are people who want to sell. Everything blue below it are people who want to buy. So excuse me for those that understand this, because it might sound a little slow. For some it might sound a little fast. I'll cut right down the middle and go through this slide just so everybody has a clear understanding, because this has to be back of your hand stuff. You got to know this like the back of your hand. Now let's say, Peter, you come in here and you want to sell 58.75s, but you're patient, right? And so you're going to trade a 2-lot, but you're patient and you're going to join the offer. This 339 would now look like what? It'd look like 341 because Peter's offering 2 more at that price. But he's patient. He thinks the market's going to come up to him, and he's offering 2 at that price. Let's say Steve comes in and he wants to buy this market down at 58 even, but he's also patient. And so Peter comes in, or Steve rather comes in, and he tries to bid a 2-lot at 58 even. Well, this 1600, with everything else being equal, will now look like what? 1602, because Steve is bidding his 2-lot down there. So you see that the prices should change corresponding to the orders that you may or may not put in. But both of these guys are passive. Steve is a passive buyer. He's letting the market come to him. And Peter is a passive seller. He's also letting the market come up to him. Now let's say the market fills Peter. Okay, and it starts to march up. Steve gets a little aggressive and gets a little impatient. And all of a sudden, he says, you know what, this market's not coming down to 58 even, and I got to get out. Either I got to get long or I got to get out. And he takes his 2-lot and he just clicks a market order to buy the offer. And let's say the offer is, let's get rid of some of these drawings. Let's say the offer is 58.75 still. And he says, I don't think it's coming down to 58 even. And he clicks a market order to buy 58.75s for his 2-lot. He lifts the offer. Okay, when you lift the offer for 2 contracts, and let's say it says 339 right there, what should it say now? With everything else being equal, it should say 337, because Steve came in and he aggressively now wanted to buy this market with just a buy market order and lifted the offer. I don't care if he's long, trying to do it to get long or cover a short. Either way, he's a buyer, and now he went from being passive and patient to impatient and aggressive. So you guys can understand the difference between aggressiveness and passive with where you put your orders and whether or not it's a market order or whether you're patient enough to lay your bid in the book and trade it that way. Is there any questions about that? Does that make sense to everybody that's in this room right now? That makes, whether it makes perfect sense or not, it's kind of clear the way I explained it, right? All right, good. So now, how does that look? Oh, where did that go? Here, how does that look on the footprint? Now, I just threw up 1 bar of a footprint. And going off of what I just explained off the dome, off the price ladder, let's take the dome, or I'm sorry, the footprint bar and split it in 2 like we did before. Same numbers are on this inside this bar. So you look at this and you go, okay, well, anything that trades at the price of 3, let's use the same prices, 2 bid at 3. So 2 bidded over here, 3 offers over here. Anything that trades at 3, when it's offered, is going to show up in this particular area. 2010 so far I've traded. Now if Steve comes in and he buys his 2-lot at 3, this number is going to look like 2012. If Steve comes in and buys 200 at this particular price at 3, what's it going to look like? 2,212. And if he buys another 200, it's going to look like 2412, and so on. So you kind of get the gist of Steve is an aggressive buyer. He's lifting the offer. That's when this number is going to go up. And that's what this number is reflecting. It's reflecting 2 things, aggressive buyers and passive sellers. Okay, there's always buyers, and I know people say, well, for every buyer there's a seller, but that doesn't matter. What matters is who's the aggressor, and then what does the market do when aggressive buyers come in, and that's how you begin to read order flow. There's a lot of people out there that try to teach order flow, and I know that's a buzz phrase that's in the business, and most people fail at it, and they fail at teaching it because they don't really know it. The important part about order flow, and the footprint might be your first introduction to beginning to see order flow. It's hard just to read order flow on a dome. You used to be able to do it 10 years ago. Now there's technology that bigger traders use to break up their orders, to hide their orders, or it's real fast with high frequency stuff. So you need something real time to record what's going on. That's what the footprint is. So what order flow is, in a nutshell, is not just recognizing aggressive buyers, but then asking yourself the question, what does the market do when you've seen those aggressive buyers go in? Because what should a market do when aggressive big buyers come in? It should go up, right? Whether it's people buying TVs or t-shirts, if there's a lot of buyers and they're aggressive, price should go up. Same thing in the E-mini, same thing in the NASDAQ, same thing in oil, same thing in gold. If it's got price attached to it, it adheres to more buyers and they're aggressive. It should go up in price. So the clue is, oftentimes, when you get aggressive buyers that come in and the market can't go up. That's order flow. Being able to answer that question is the most important part of analyzing a market and being able to polish your predictive skills as knowing what might happen next. We're in the predictive business as traders. We only get paid at accurately predicting what's going to happen in 5 minutes, 5 seconds, 50 minutes, 5 days. And then being able to manage out of that when we're wrong. But aggressive buyers, market should go up. But if it doesn't, that's that head-scratching moment that you should have where you say, why did a big aggressive buyer come in and this market couldn't even go 3 bid? Steve is probably upset because he bought 200 more, 500, 600, and he's a big trader, and he can't get the market to go up. He's angry right now. What that means is, and I'll explain a little bit about this tomorrow, is someone's in there saying, we're not going up. Someone's passively selling it to Steve, and he's putting a lid on it. And the analogy I use is, it's like punching a guy with everything you got, and he doesn't flinch. Now, I don't know about you guys, but I'm not that tough. I'm going the other way. Markets do the same thing. Everything they got, and it can't go up. That's where the tell, that's where the clue is. Buyers that come in and aggressively buy a market and it goes up, well, great. That's information, but that's what it's supposed to do. It's when a market doesn't do what it's supposed to do, and analyzing aggressive buyers and passive sellers is that introduction to understanding orders and how they flow. And unless order flow is ever taught in that direction, it's taught the wrong way. That I can guarantee you. So again, the footprint has been the best software, the best use of reading order flow for me. Now, tomorrow we're going to talk a little bit more about how to use that in specific areas, whether they're your areas, my areas, predefined areas where you think the market's going to rotate off of or things like that. I'll cover more of an application of this particular technique in getting long or getting short, and where guys are stuck long and stuck short based on this explanation. Now, let me go up a couple slides and rotate back to this. Let me end with the footprint discussion for today with this. The footprint is locating buyers and sellers and then finding out what they're doing after you locate them. But what's most important about the footprint is what isn't useful. What is not useful is every single number inside of it. And to save yourself time, and maybe this gets a lot of people excited when they're looking at it, you don't have to understand every uptick and downtick. People who do or try to aren't real traders. So I'll save you time and things like that to help kind of circle around as to really trying to polish your predictive skills, whether you're short, medium, or long-term approach to trading. Market profile, because this is another popular and important element to MarketDelta, is market profile enablements. And so I use market profile not as a true market profiler does. I use it as decent analysis of just quick snapshot. Like the footprint to me is the third dimension. Market profile is like that 2D snapshot, little longer term. You don't see everything in the volume in the volume or market profile that you're going to see in a footprint. But what's interesting and what's important about market profile are these things. And I don't begrudge anyone who's a true market profile disciple, because it is probably the best tool out there to use and analyze, because it's all about volume. So there are a few things that I look at. Number one, in a straight profile, and these are just basic things, but things that I think are important, because I don't advocate anybody needing to be again, an expert in market profile. I think if you have these basic things covered, it is important, and I have it on all my charts, but I think that you always want to know what the most active price is, and that's what this little yellow highlight is around this bar here. That's the point of control, or the POC. That's just simply where most volume has traded in that particular profile, which is, let's say, a daily profile, where most volume is traded and at what price. So let's say this price is 3. That's where most volume traded in that market this day. And then you look at, so this would be called a HVN, or high volume node, and then these low volume notches is also important for what the best word is, rejection. So typically if a market is coming down and it hits this low volume area, it should reject reject and go back up. So this should be an element of support. I don't use it as true support or resistance, but I am cognizant of when low volume nodes and they're pretty clear that they're there are coming in to play in this particular market. The best way to understand market profile is not just to use it in one day. Use it in the 3 strips that I showed you. Let me go back to my charts. Use it in the 3 strips, today, yesterday, and 5-day. That gives you a sense of what's going on today, yesterday, and the last week, right? And so to me, that's what's important, and I have them all on my chart, so it's all live and it's all in front of me. I don't have to skip around. The other thing about market profile, and this will be one of the more interesting things, that if you're really into market profile, or you really want to be in a market profile, you found the right place, and I'll give you a real helpful kind of springboard into what you're doing, and that is, don't just analyze market profile on one market. Look at relationships in markets and analyze the profile in a market like the NASDAQ along with the S&P E-minis, 2 markets that relate for obvious reasons, and then therefore where does their profile show you information that's in confluence with each other, and start walking down that path. Don't just be a single market expert, because you will not trade your way out of value. You will not find value. You will not be able to create the ability to see richness or cheapness. And I think that's what's most important, is being able to understand if a market's getting cheap or expensive. That's the only reason why markets move, is people get stuck the wrong way and they cheapen it up and they need to come in and buy it. I'll get into more of that tomorrow, kind of a short preview, and then I'm going to leave you guys with some time to ask some questions. But we're going to take the footprint info that I laid out today, and we're going to use it for actually applying it to trades, or, hey, if you're bearish and you want to get short, how do you use the footprint to enter? Then we're going to look in conjunction with that with balances and imbalances in the footprint, and what does that tell you for 10 minutes, an hour, intraday kind of information. Then I'm going to preview and show you how to add this big lot filter into your chart, which is filtering out big traders, bigger size traders that are aggressively buying or selling a market, going off of what I talked about earlier. And then I'll talk about some incentives MarketDelta laid out to subscribe when your trial is over. Let me ask you guys a few questions and type in yours as well. But how many guys in here are on an active trial with MarketDelta this week? This, by the way, is using the footprint to trade. Some of the images and live charts I'm going to show you guys tomorrow, and this is this big lot option, where at the bottom you could see filtered for bigger orders that come in the market, showing you sellers when they're red, buyers when they're blue. All right, so some of you guys are active. What questions? There's a couple questions in here. Is there any other questions you guys have? And I kind of run through them as we go. Don't forget, again, tomorrow, same time, 11:15 Central Time. Same link. You don't have to re-register. You'll get an automatic email from GoToMeeting. Just use that like you entered today to enter tomorrow, and kind of walk you through a little bit of how to use the footprint to actually trade. Again, market profile, just to walk back, because there's a couple questions on it. There's low volume and high volume are 2 important features. The high value area high, value area low is also important, and that is if you just took a simple bell curve, which is what a profile is supposed to look like. Most of the volume took place at the at the top of that bell curve. Value area high would be at the top portion when it begin to bulge out, and the bottom is value area low, right? And that's oftentimes support and resistance that volume profilers use. Now, you could have all kinds of reasons for support and all kinds of reasons for resistance, but unless you're able to qualify which ones have a better probability of working, then you're just playing a percentage game that you're not going to actually see any kind of success, because even if something works 80% of the time, that's only if you use it 100%, and most people don't. I was talking about this in the trading room that I host today, that I host every day, but today we're talking about the percentages of different levels working as support or resistance in market profile, okay? And they're high percentages, 80%, 75%, 90%. But I told people, I says, take those statistics and throw them away. I says, that, first of all, is only given if you traded 100%. Nobody trades a strategy 100% unless you got wires for blood veins and you're not human. The only people that trade let's say something works 80% of the time and you trade it 60%. Maybe you're realizing a lot of the 20% it doesn't work. So again, don't let high statistics be deceptive. Numbers do lie in that respect. You have to know what's going on now in order to qualify a level, an area you think the market's going to stop and go the other way. The footprint allows you to do that. The footprint, to me, is so many people pour in a lot of time and effort into studying charts, which is just a historical perspective of what happened. So they pour so much time in studying the past to predict the future that they neglect the present. And so if I left you guys with that for coming into tomorrow, is the footprint is the present. Order flow is the present. So you could do all your study and all your homework is trying to find a setup, but real time is where you're going to always have to enter. And the footprint allows you to understand buyers, sellers, and where, if the market could wave and say, hey John, hey Joe, hey Peter, hey Steve, this is where you buy me, that's what you're looking for out of this software, out of the footprint. Market profile is good for analysis. It's better for a snapshot of what's going on in the past. The footprint is more the present and the recent past that I'll cover more in its application to trading tomorrow. Any more questions from you guys before I wrap it up? Again, tomorrow I'll go over the big lot option, applying the footprint to trade, and then some of the questions that may have come up from you guys off of today with the definition layouts that I sent you. Steve, are you still here? I'm going to stop the recording of this and then get into any more questions you guys have.